And so hello everyone, and welcome to our session today that we're talking about the Web3 trends of 2023. We definitely had an interesting year last year, so let's see what's in store for us in 2023, see who's in the industry, who's building through the crypto winter, and where people are focused on. For those of you who don't know me, my name is Bridget Greenwood. I founded the Bigger Pie back in 2019 after being in the industry for a couple of years, because I recognize that we have technology that can change and shape the world, and how we choose to move forward, build, incentivize each other. And I didn't want to be built by the same people who previously have been around, which means basically that we need to include women. There are incredible women in the space, many of us who are our speakers and expert panelists this afternoon. And it's an absolute privilege to be working with them. But thank you everyone for joining this call. In terms of what the Bigger Pie is doing this year in 2023, we're looking to roll out a playbook for diversity, equity, inclusion, and belonging, because if you look at tech industry across the board, not necessarily in Web3, but everywhere, women leave at twice the rate as men. So as much as the work is being done to attract everyone and women into Web3, there's no point in doing that unless we can address the issues where tech women are leaving in tech. I think it's also very unfair to our startups who are building to be able to understand what is the best way to build with diversity, equity, inclusion, and belonging in the DNA of what they do, because we haven't figured that out yet. So the playbook is something that we're doing with Ripple and UC Berkeley and other people in the ecosystem. So if you're interested in learning more and being part of that, that would be great to let us know. And so it's to give a blueprint so that whether you've been a Web2 and you're coming over to Web3, then it's easy for you to be able to follow what are the processes, where do you find the talent, and be able to attract and then retain that talent in there. So that's a little bit about the Bigger Pie. We're also doing 2 courses that we'll be launching this year. One is we need to make sure that we have people who can build in this space. So we're doing a 0 to CTO program to be able to attract more women in those roles. And you need to be able to tell people what it is that you're building. So we'll also be launching a 0 to CMO, and we'll be building on the education. The other thing that we want to do, and the reason it's called the Bigger Pie, is it's working with everyone to make sure that we benefit the ecosystem for all. So if you have great resources, great education, ones that you're running yourself or ones that you've used yourself, again, please let us know and we can share those into the community. So let's get on with today's topic, which is Web3 trends for 2023. I'd like to invite Karen from Stack, our co-host for this event, and Karen and I and Stack and the Bigger Pie will be working together throughout the year to be able to bring on events that that are interesting, that are informative, and that can help people who are in the space to be able to progress, and for people who are looking to come into the space be able to do so. But Karen, I'll let you say a few more words about yourself and Stack.
Perfect. Thanks, Bridget. Hey, everyone. Really great to meet you. My name is Karen. I'm the co-founder at Stack. We're a growth consultancy, and we work with startups and scale up, especially within the blockchain and Web3 space, to help them scale their team, get access to funding, and in general, find partners along the way. So I'm really excited to be doing this with Bridget. We met a few months back and I absolutely love what she's doing. So we really want to get involved because I think it is very important to get more diversity and equality within that space. So that's what we're doing now. So this is the first event of a lot to come. So I'm really excited for everyone to be here. And yeah, let's introduce our speakers.
Absolutely. Zara, would you be kind enough to introduce yourself first? Yeah, we can't hear you, Zara.
Sorry. Yeah. So hi, everyone. I'm Zara. I work with Chromaway, Nordic leading blockchain company, as Chief Solutions Officer. And I'm also co-founder of NeoKey Multi-Metaverse platform. I'm a blockchain solution architect in my expertise. And almost about to finish my PhD in blockchain adoption as well. And yeah, so that's who I am. I've been building blockchain applications for the past 7-8 years. purely working on blockchain in different industries, in healthcare and logistics, supply chain and gaming, and a lot of fashion and metaverse these days too. Yeah.
I'm looking forward to touching on that. I've seen a lot of fashion that's been coming out in the last 6 months and this year as well. So it'll be really interesting to dive into that a bit more. Next, I'd like Amber Goddard to be able to introduce herself. Amber and I are co-founders for the 200 Billion Club, which we launched our first cohorts last year. The 200 Billion Club is really focused on those underrepresented and overlooked, underestimated founders who don't get their fair crack and their fair share for VC funding. Amber herself is also a co-founder at Alliance Block and an investor, so she has a lot of experience and scope. But Amber, if you could some more color on your background, that would be great.
Thank you, Bridget. Yeah, I mean, I come from finance, was in trading structuring at a large American investment bank, quit in 2018 to start a blockchain company. We're basically an infrastructure company. We build DEXs, bridges, lending protocols, and the rest. And this year we were really focused on what we call programmable NFT protocols. So we scaled the company to 100 plus employees. And then I joined Bridget last year to create the 200 Billion Club. And this year we will also be launching a VC fund focused on emerging technologies, mainly Web3 and generative AI, for diverse teams, because, well, we believe that diversity is good for business. Diverse teams generate more returns and most importantly, more profitability than non-diverse team. And this is something that both Bridget and I are very adamant into pushing. I also work with a couple of the large regulators in the US and in Europe on the crypto and digital asset regulations.
Amazing, thank you. And we have as well Mona Tisa with us. Mona is one of the few female VCs in this space, so it's wonderful to have you with us. Could again put some more color on your background for everyone.
Hi, thank you so much for having me. It's a pleasure to be here. As Bridget mentioned, yeah, I work for a venture capital fund. It's a publicly listed fund based out of Germany, but I'm in London. My role is really to do the investment, so quite suitable to the topic. I look at trends. I speak to a lot of phenomenal companies across the space and decide to allocate capital towards their projects and support them, I guess, throughout their journey as much as possible with introductions and whatever they need, I guess. That's really my job in a nutshell. I really love what I do. I've had my first contact with the blockchain space in 2013. And 2013 was my last year of university. And I didn't quite have the guts to do this full time back in early 20s. But then I decided to, go into it a bit later in life. And yeah, I'm very excited to chat to you guys today about what I see from an investor perspective about the future Web3 trends in 2023.
So if we start with, because you mentioned the deployment of capital, why don't we sort of start with there? So within the 200 Billion Club, Amber and I have launched the Web3 cohort. So we know what it's like to be able to look and raise. So outside of Web3, we've seen a lot of change in the financial economy. And then within Web3, if we look at what happened last year, and we had a series of upset scandals and obviously a huge correction, should we say, in prices. So, Mona, we'll start with you. What are the lessons that we're learning from last year that you think are important that we take into this year, especially when we're looking at through where capital is being deployed?
I think one of the things is that what happened in previous years, or more, let's say during the whole bull market cycle, was that capital was a lot of the time deployed on hype and not so much based on, really researching, examining, looking at the diversity, for example, of the teams, looking at the underlying tech, looking at, I would say the normal, if I may use that word, or the traditional KPIs, I think, or criteria that you need in order to kind of really see if your startup is going to be successful in the future, right? And that's really from the ground up, building the right team around you, making sure the product has a use case, being able to adapt it. You know, we have all the buzzwords like interoperability, scalability, being able to adjust maybe to regulatory frameworks that come into the market. I think those are the things that builders now in, sadly, a bear market, but the bear market provides the ability for building, for research, for teaching, explaining, thinking, and learning in a more, let's say, slow-paced environment. Whereas really, I think a problem that was made or is always made in bull markets is that capital flows easily into VCs or capital givers. So they have more capital deploy, also kind of deployment pressure almost. And then capital is just spread at extremely high valuations of companies, which then in later rounds actually have to downgrade, right? Have to reduce their valuation, which looks bad for them in the long run, even though if they would have been advised more professionally by VCs and lead investors, they might have not had to do this. But this whole hype cycle creates a lot of, I would say, negative capital deployment, and a lot of now companies that are not surviving the bear market. Whereas, you know, like I said, I think if they would have thought about it a little bit more carefully and given a bit more, you know, more traditional, let's say, advice on how to set up a properly functioning startup, they might be still surviving at this point.
And are there any sectors, areas, specifics that you're noticing that VCs and investors are looking at? I mean, feel free to join in, all of our panelists here in this. I know that Amber and I, when we're talking to VCs on a daily, infrastructure is really sort of very key to what they're looking at, things with utility. So if there's any more that you would want to share on that, and as I say, Amber, Zara, Karen, please step in.
Yeah, I in something maybe based on my experience. I mean, I generally don't dislike the bear markets, right? I consider it the time that a lot of tourists go away, right? And then the
Yes.
day. So that is the time that I consider the bear markets for, because I think one of the mistakes that we should learn this in this bear market is that we need to start building businesses, right? We don't need tech bro teams. We need businesses, right? We need to start building and create value for real people. But we had a lot of overvaluation, or, you know, a lot of companies that, like you said, you know, they didn't expect what is coming up, and they went bankrupt, or they had to shut down. Is, if you look back at them, they weren't really building businesses. They were a group of tech bros hanging out together and, you know, enjoying the hype, and then they're gone away. And now what stays in the bear market is often the real builders that they continue build, and then they sell it in bull market. So I think the major thing we need to learn is we need to bring in real entrepreneurs into this space, like people who really know how to generate value for society. But then also we need to take a step back. From my point of view, the next bull market will not be about Web3. The next bull market will be about Web 2.5, because I don't think the technology, but also people are yet ready for a full capacity Web3 application. And you will see a lot of transition from Web 2 to Web 3 transition. That's why I call it 2.5 coming up in the next bull market. A lot of, you know, mergers of Web 2 and Web 3 businesses. And that is amazing. That's, of course, a big step forward from where we are today. But I think that would be the best lesson from the past mistakes for us.
Yeah, just going back on that, and maybe it's interesting to just, you know, look at Web3, crypto, digital asset, and put it in the context of tech in general. what Mona was saying is correct, but it also applies to tech in general. So since 2011, there's been so much cash on the street that VCs were able to raise very, very large funds, and they needed to deploy these funds. And so revenues at any cost, or growth at any cost, was the motto of the game. And that led to, overinflated valuation across the board in tech. One thing that I usually tell people to remember, because everyone talks about, how crypto has crashed 85%, I tell them, look at how much Facebook or Meta has crashed. It has crashed 70%. So all of this FOMO is sort of disappearing from the market, and the fact that rates are coming back up, that inflation is up, that we're in an environment that is, closer to pre-quantitative easing space, actually is highlighting the importance of bottom lines, highlighting the importance of profitability, which is something that VCs and investors completely forgot about during the last decade. And one thing worth highlighting as well, we need to remember that Tesla at a certain point, which was a couple of years ago, was trading at a 1,000 PE. 1,000 PE, that's crazy. So craziness exists in both the traditional space and the crypto space. I would say, in terms of trends of what we've seen in 2022, in terms of VC investment, a lot of it has gone to NFT and gaming. 51% of this was in the VR metaverse space. We think that, this is going to, decline in the next few years. There've been a couple of mess ups that we can discuss at a later stage in the gaming space. But we've also seen, again, last year, a proliferation of, in my view, companies that don't really, or protocols that don't really have any real utility. Things like X to earn, move to earn, sleep to earn, that have tokens. But what is the utility of this token? Just, you take your token and you translate it maybe into a discount in a shop or something like that. This is not really revolutionary. But again, infrastructure was very strong. We've seen the emergence of app-based chains. So chains that sort of simplify the complexity of blockchain and make it easier to access to non-tech profiles, things like the Cosmos ecosystem, the Avalanche subnets, the Polkadot parachains, etc., etc.
And maybe just to add to that, and I totally agree with what Amber and Sarah said, because the question was, I think, also around what trends do investors see, if I remember correctly. And you said infrastructure. I definitely agree with that. I myself and many of our co-investors in the network really are focusing a lot on infrastructure, so kind of building the building blocks, right, of the next web, let's say Web 3 or Web 2.5, but really the building blocks. So making it interoperable, making it truly decentralized, making it truly scalable, and also making it usable, because there's a big problem around complication. It's just very complicated. People don't understand. It's very few people can use DeFi, for example, because it's highly complicated, and you lose a lot of money by just sending it to the wrong wallet address, for example, which scares people. So there's just not enough education, right, in the market in general. So the building blocks to bring a more, let's say, mass adoption ready internet or Web3 to the next generation of users to be, let's say, onboarded into this space, I think is what many investors right now are looking for. And of course, we can dive into the details, but from a high level perspective, I think that's where I'm also focusing my, what I say, like truffle pig looking is sorting out, because, I'm trying to find interesting companies that are really building in this bear market. But I know, maybe just to finish off that thought, there are still a lot of investors that are also looking at kind of building blocks for the decentralized metaverse, right? So really looking at how can the metaverse be created not Meta or Microsoft dominated, but dominated, let's say, in a decentralized way or decentralized virtual environments. Here also quite a lot of focus is set for laying the groundwork of that to be a reality. I know, for example, I think $120 billion went into that in 2022 in the first 4 or 5 months. And we're still, I think, seeing that money being deployed and building to happen in that space. So I think that's also something to watch, right, going forward.
Absolutely. I mean, I did a workshop on ChatGPT last week, and it really is transformative, I think, in terms of looking at generative AI, how we can integrate that to have much better onboarding, user experiences, etc. I'd love to dive into those sort of techs and trends. I just want to spend one sort of last part of looking back and how that helps us to move forward when it comes to things like ethics. And I know that Zara is very passionate about making sure that we build ethical metaverses, but also on the regulation side. So Amber, it would be great to, you sit on these SROs globally, to get insights on what do the trends of regulation look like from your viewpoint.
Well, for full transparency, we were expecting regulations to come in 2022. Now, things have been slow, and we were very much pushing for self-regulatory organizations, especially in the US. And we've made quite big steps into getting there, working with Washington and working with the regulators themselves. I would say the fiasco that we've seen from Luna all the way to FTX is going to get the regulator to come in and come in hard. One thing that is worth noting is that what happened is absolutely not surprising. For those of you who were in finance, everyone remembers when banks banks and financial industry got deregulated in the 80s and 90s. This had led to the 2008 crisis. And basically what we saw the past year was almost a replica in terms of internal control, in terms of lack of transparency, in terms of bad risk management, in terms of over leverage and not badly collateralized positions. It was almost a replica of what happened in 2008. So that's very frustrating for many of us who were in finance and moved to crypto, because it was always a red flag. And when there is the potentiality of bad behavior usually occurs, especially when money is involved, right? I mean, I always say people who are entrepreneur or people who are in finance, any type of finance, whether, digital finance or traditional finance, they are risk takers. So risk takers need to have boundaries. If you don't give them boundaries, it will F up, unfortunately, and that's what we've seen. And so now the worry really is on having, especially in the US, having a very, very tough regulation framework, especially when it comes to DeFi. Again, worth highlighting, I'm not really sure what's the background of everyone on the call, but most of the fiascos that occurred, except for the stablecoins, so the algorithmic stablecoins, most of the fiascos that occurred were in what we call CDeFi space. So it was centralized, decentralized finance. So it's not really decentralized finance. It's more of centralized entity benefiting from the lack of regulations and just, creating what some would call them Ponzi scheme, but creating really badly managed positions, really over leveraged, not collateralized position, etc., etc. And so, unfortunately, instead of the focus now being on the CDeFi, which needs absolutely to be regulated, the focus also is going to be on DeFi, and that might have some negative consequences on the space. Worth highlighting that protocols that are fully decentralized, like Aave, have not suffered any losses. And even when you had the Luna fiasco, we didn't need a lender of last resort to solve the problem. People lost their money, but we didn't need a lender of last resort. So now, if the consequences of Luna on the CDeFi was actually regulated, we would not have had all of the domino effect that that we've seen. So in some way, Europe is much more advanced than the US with MiCA. With MiCA being implemented, but the big hammer is the US. It is like one of the largest market in crypto in terms of trading and volumes and users, and it can be detrimental, will be detrimental to the space.
And Zara, if you want to pick up on that, feel free to share in terms of the regulation, but it's sort of regulations and ethics. I know that you, as I said, you feel very strongly about the metaverse and ethics and building it for everyone. So it would be great to understand what you've seen through ChromeAway, what you're seeing through Gnocchi, where you're seeing that we should focus on and where the trends are pointing to.
Yeah, of course. I think first we need to go back to the very, very basic definition of what do we mean by decentralization, right? Because everyone uses the word decentralization, but for each one of us, it means differently, right? Some people don't consider, like we only consider fully decentralized metaverses. Some other peoples don't. In metaverses, we also have two different types of metaverses. We have closed metaverses, we have open metaverses. Sandbox, for example, is a closed metaverse that is controlled by Sandbox, and then we have open metaverses that is controlled by a foundation and by a community, right? And is being developed through the decisions made by a community, like Alice, for example, My Neighbor Alice as a metaverse game that is owned by a foundation. The foundation even decides on the color of the phone booth of the game. So we have many different definitions of decentralization, and of course, at what layer we want to implement that decentralization then exposes us to different regulations, risks, and it is as well. But coming back to the discussion of ethics, one of my biggest concerns is that we are a very small community of people are building this decentralized world of tomorrow that everyone is going to live in it, right? And it's natural that we're all biased humans. It's natural that we will bring in our ideas and our thoughts into the code, right? And that is that going to create a crisis in the future? Is West going to set ethics of the room that the East culture is going to live in it, or vice versa as well, right? Who is going to set the ethics and ethical rules of a world that we are all going? Of course, it's going to be a community will decide on that, but then still setting all of these ethical boundaries is a challenge, definitely. And Amber was talking about having boundaries to creativity and to risk, but I actually don't know if I 100% would go that direction. Like, I think we actually want to take those boundaries off, right? I understand going off boundaries is also crazy. It can create a lot of chaos, but and regulation tries to actually secure citizens' rights and protect their rights as well. But I think the whole concept of us stepping into decentralization through blockchain technology was that we were sick of boundaries set by centralized organizations for the rest of the world. And I think going back to that boundaries is just, running in the same loop again. So I think but I do agree that we need to have a progressive decentralization, right? We cannot go totally off boundaries from day one. We need to have a progressive decentralization, step by step. And that's exactly what I mean by when I said Web 2.5, right? Coming to people and now suddenly introducing no boundaries it might sound crazy as well. So we need to talk to people slowly and progressively to make sure that everyone understands the decentralization that we all agree with, and everyone can live with as well.
Just going back on that subject, because it's a very important subject, and most of the time, unfortunately, not well understood. There is no way for a project at its start to be fully decentralized.
Of course.
If project at its start is fully decentralized, it's going to lead to a disaster. Because when you start a protocol, unfortunately, whether we like it or not, you need to have a team that is leading, that has a vision, and that is driving this vision with, very specific KPIs. When you start bringing the community very early on a project and trying to decentralize, some of the code, some of the vision, et cetera, it just turns into mess, in my view. That's number one. Number two, and that is something I've worked on very hard because I found it excessively obnoxious and not in the vision that we have for the decentralized world, is the setup of the DAOs. So people talk about, wow, it's great to have communities that vote and it's driven by the community, but is it really? Is it really? So most of the current DAOs work on the basis that the votes are weighted by the number of tokens that the user holds. So what does this mean? This means the more money you have in the system, the more control you have over the system. It means VCs who have a lot of funds in there have the most voting power in the system. And we can go back to what happened with MakerDAO last year, I think, or the year before. So this is not really about decentralization. This is about the worst form of capitalism that we have since the 80s. And so there's been a lot of work that people have been working on in terms of creating fairer voting system for DAOs, things that are based on what I've called calibocracy, which you look at a weighted average of the user, and that weighted average of the user can be part of how many tokens he holds, so how much capital he or she has in the system, the amount of work that he is inputting into the system, which can be the amount of code that he is developing, and then the amount of knowledge or information that he or she is inputting into the system. So this will be a fairer voting model, and this will be a closer thing that you could have for a real DAO, so a real decentralized autonomous organization. But unfortunately, we're still not there, and hopefully we're going to start seeing more and more reputation sort of based models coming into place to control the voting systems in DAOs in 2023.
So we've looked at what we've learned that happened last year and that we've built on, and how we'd like to build in the future. It would be great to touch on what are the exciting projects that you're seeing, that you're involved in, that Myrna, that you see that come through, the ones that we can talk about, the truffles that you've had. I know, Amber, we have a number of exciting startups as well that you can draw information from. Karen, feel free to step in. I know, for those who went here at the beginning of the call, Karen, bless her, has been very poorly and has a sore throat, so not participating as much as she would like to, but we're doing monthly events, so you'll get to hear more from Karen from there. But yeah, Zara, if you can talk to me from what you've seen at ChromaWay, what you're seeing in Neoki, where you mentioned fashion before, what are you seeing those trends being?
We actually recently did a trend study at ChromaWay, like what are the upcoming trends and where is the market going to? We see a lot of course, interest still in blockchain gaming, and then blockchain gaming is quite huge as well, quite diverse, but then also a lot of in esports. I think sport will pick up for sure, and retail, which includes fashion as well. And therefore, but I also see quite big trend in open metaverses, open world metaverses that are also owned by community. I do agree definitely that pure decentralization is impossible and a chaos from the beginning, and that's why I called it progressive decentralization. It always starts centralized, and then over the time, eventually, you pass out the power to the community, basically. But from my point of view, anything that is, for example, Neoki, we started Neoki as a multi-metaverse focusing on the world of design, and mainly because it was about creating and enabling people to build that democratized, decentralized, fair world. So anything that would allow people to go that direction would be, and in less regulated spaces, right? So and gaming is not as regulated as healthcare, for example. Healthcare is always a perfect case for blockchain, but the speed of picking up on blockchain in healthcare is like absolute zero compared to fashion, for example. Fashion is less regulated and more attractive to that everyone is involved with it on an everyday basis. So I see definitely gaming, sport, fashion, and retail picking up in the Web3 space. And a lot of IP will come. So I think IP, securing IP for metaverses and for Web3 builders is the biggest activity of them, at least until the next bull run. I think everyone is now competing to secure more IP rights for Web3 space for themselves. All the protocol companies are at least competing on securing more IP rights.
Can you give some color on what that looks like in terms of the IP rights?
For example, recently we signed the IP right of Elle fashion magazine with My Neighbor Alice, the game we have in Cromway, and that means being able to, you know, build with Elle there, having Elle stores in our Web3 spaces, sell Elle products. Basically, Elle presence in Web3 will happen with Chromia, right? And of course, all of these IP licenses are not exclusive as well, but this is an extremely important step for the protocols or even dApps, metaverses, right? And NeoKey also, now we're securing IPs of celebrities, influencers, or brands. So because this will help with the transition of people from Web2 to Web3 space a lot.
So gaming is quite an interesting one, and it can be it can be a little bit controversial because so you have a big gaming community in the world. This big gaming community is not convinced that Web3 gaming is the future. So you have a lot of gamers that don't want even to touch Web3. And if one of their games go into Web3, they sort of boycott it and, you know, organize online boycott events and the rest. But what we really have seen is that in terms of play to earn gaming, they are the subsector that actually lost the most value and the most users during 2022. And I think in terms of value, it was that like down 80% versus 65% for the overall market. There has been quite a few disappointment in this space. We were expecting to see AAA games coming through. Most of them are delayed. So the like of Star Atlas, Elysium, and some others. And so a lot of people are starting to doubt whether yes or no, this year is going to be the year of Web3 game. I believe it's a very difficult one, because when crypto does well, Web3 gaming does well, and it's mainly crypto users that go into crypto games, into Web3 games. As long as we're not able to attract the traditional gaming users, it will be very difficult for crypto gaming or Web3 gaming to succeed. Now, another thing that is very, very interesting and that could really be revolutionary in the space, I mean, for those of you that remember the early 2000s when Netflix started, and when being able to stream a movie online was revolutionary. So that was a big revolution in terms of computing power and the rest. We still don't have this in the gaming space. Having full online games, high quality online game, is still something that a lot of people are working towards. So we have seen also the emergence of what we call, and one of our startups does that, Deep Square. So they do computing, decentralized computing, high performance computing. So this decentralized high performance computing could be the door to having full online games without you having to download something on your phone, without you having to download something on your laptop, without you having to use a Sony PlayStation or the rest. So that's in terms of gaming. In terms of brands and fashion, absolutely agree with Zara. There have been like a real FOMO in the space. Every brand want to have a Web3 presence, whether it is in the metaverse, whether it is in NFTs. And for me, this falls more under their sort of PR marketing strategy rather than a fundamental change strategy, because I'll be very honest with you guys, who cares? Who cares to have an avatar that has a shoe from whatever, Gucci or whatever it is? What is the use for it now? Still no use. Maybe perhaps in the future you can, whatever, go to a shop and be able to get it, to get the real shoe. But until today, this has not been in place. So it's great marketing, it's great brand recognition, but there's still work to be done there. But in my view, this is something that is gonna keep going and keep going strong. One thing where we saw a real interesting application of blockchain was the creation of, and I can't remember the name of the chain. It's a chain that was created by Louis Vuitton, and I can't remember some other
Aura.
big.
Is it called Aura chain?
I think it's Aura. Yes, yes.
Luxury fashion supply chain.
Exactly. So this is a real great application for blockchain in the fashion space. If maybe a lot of you don't know, but secondary fashion markets is a huge market, and it's a market that keeps increasing on a day-to-day basis and going to potentially overtake the traditional market. But most of this secondary market, the brands don't get any penny from it. So as an example, Cartier makes 300x. Oh, there's 300x more trades on the secondary market of Cartier than in the shop. And these brands are not able to get any penny out of these secondary trades. So them being able to have a, to have the identification number on the blockchain and being able to track the ownership of each item from, one owner to the other will allow them to start receiving royalties every time one of these items is going to be sold on the secondary. And for me, that is something that is revolutionary. And also we have one of our startups that is working on it. It's called Sociate AI. See, we work with a lot of startups at the edge, at the edge of Web3.
I want to add something here because Amber, you mentioned this track and tracing. Because we are building this is what we call digital product passport, right? So you have a digital product passport that you track and trace the product throughout the supply chain, all the way from manufacturer to the end user. And then the value added here in the fashion, and especially luxury fashion, is the anti-counterfeiting that you can actually implement. But
can you repeat that? Sorry, Sarah, I couldn't understand. The value added is
anti-counterfeiting, when you can buy an original, a genuine piece of luxury Vuitton bag versus a fake product, right? So, and this has been like one of the first and most attractive use cases, but there is a huge challenge when it comes to that. So I've seen, because that's something I've worked on a lot, I've seen a lot of startups and companies working on that and failing, including the Aura chain so far, haven't been able to really add that value, because we have a lot of product identification challenges off chain. So, so there's a lot of counterfeiting that can happen off chain. So what we record on chain doesn't necessarily always validate the products, but that is extremely valuable. If someone can actually get that fixed, then of course they will be the billionaire in this space. And at least that is something that we are working on Chromia with EU, in an EU project, that we're building a digital product passport in textile and fashion industry. And that is something I wanted to add. But then in terms of secondary market that you mentioned in the fashion, I want to go the other way around. Like I want to say, like, why should the brands always be included in all of this economy and not the users? So I want to say the applications here that actually include end users in the economy that the brands are building are going to be revolutionary in the coming. And that means DAOs of fashion brands that are owned by the community. Like if I'm a fan of Adidas my whole life and I buy it, but somehow I am part of this growth. But today I'm definitely excluded from the economy of it, the incentive of it, right?
You can buy the stock.
Sorry?
If you want to be part of the growth, you can buy the stock. Then you're part of the growth.
But then by wearing it, you're basically, or promoting it, you're basically doing a marketing job for the brand. So you need to be part of the economy. You can always, of course, buy the stock or buy the token and be part of the economy of anything. You don't need Web3 for that, right? But how is Web3, when we call it a web that is running on a token-based economy, is supposed to create that diversity and that inclusion with the end users. And I think those, including in the fashion or any other industry, the applications that are going to include end users in the economy of the premium brands or the premium players are going to be revolutionary, I would say.
And the fashion world is definitely right. They have always embraced emerging tech. They have huge carbon footprints in terms of what they're manufacturing. They produce overstock of 40% of everything that they're ever going to sell. As Amber said, the secondary market, the pre-loved market is becoming a footprint requirement as well as a commercial environment. So there's definitely ways that can be, Web3 technology can help to revolutionize that. I was wondering what other startups you've seen at Chromeway through the investing that excites you. Mona, what are you seeing?
I would look at this from a very different angle. I would go a little bit more into infrastructure. So I think the really interesting developments in the actual underlying technology that we've seen are, for example, things like decentralized internet routing protocols, or kind of platforms that allow developers to speed up the connectivity for applications on server infrastructure. So basically being able to communicate, I guess, again, above or amongst more blockchains from a DApp. So kind of quicker messaging, faster connectivity, more in terms of, let's say, scalability as well as a topic of the underlying infrastructure that enables, when more use is there, that this is actually also able to be managed, right? And not cause a lot of technical underlying issues that then have a negative effect again on the industry because nothing's working and everything has outages, etc. So I think underlying tech infrastructure is what we're really looking at and what we're really, really interested in. Also, I mean, digital IDs, haven't done an investment in that scope yet or space yet because it's very, very competitive. But I think we're looking at ZK proofs for digital identity as a solution. So really trying to solve a variety of different problems within the identity space, such as compliance. So actually being able to be compliant so that it's actually usable, right? To be in a regulated real world, to have a digital ID be an actual usable factor. So it has to somehow be able to adapt to regulation and compliance without sacrificing privacy. So being able to avoid crime, being able to be compliant without sacrificing privacy, being able to, fight against, I guess, civil resistance, or using bots to vote, for example, in DAOs, or get an opinion across, or get something upvoted, or whatever it may be, because of, bots rather than actual real people. And also wallet recovery, right? A big problem. People are scared to lose their keys. People do that. There's this big hurdle of, oh my God, what am I going to do if all my money is gone? Those are kind of infrastructure aspects that we're looking at to solve from current builders in the market, to really fix some of the major problems we see. And we see a lot of startups that try to do kind of, let's say, layer 0 versions, speeding up networks, being more scalable, better solutions for digital identity, etc. And we're kind of in the midst of scoping through all of that tech and trying to understand, what makes most sense, where are the winners, what is actually going to be some of the base infrastructure for the future Web3. And maybe to come to a few more, like, let's say, easier to understandable things. I mean, tokenization of real world assets, we're also looking into that, or generally of assets. because I think this NFT, NFTs have lost a very large value recently in the bear market because some of them are just pictures, right? They have no utility. So having actual real utility associated with this unique digital aspects on the blockchain, I think is quite important. And not all, Heather, I see your point, but not all of them have utility. That's a lot of the issues. Some do, but not all of them, and therefore a lot of them lose a lot of value, right? So I think what the point here is that you have more, an NFT doesn't just need to be a picture, it can have a variety of different values, right? And it can have a lot of different utilities, and that's really the point. So I think there's also a trend towards understanding how tokenization of assets can be used across the network in a variety of different ways, and big banks are doing this already, and internet routing, like, or let's say protocols that are routing data across different private and public blockchains in order to trade tokenized assets are being developed. And I think those are some of the really, really exciting, really, really interesting things that actually are going to make a big impact. And in the relatively close future, that is also going to be understandable for a large amount of people across the world, rather than just say it's very, very abstract applications of the blockchain. And the last point, I think, is also the regenerative finance, right? ReFi. A lot of the issues or complications we've seen is that, oh my God, so much energy is used. Of course, we all know that this is not quite true, but the problem still exists. So a lot of the trends that are also emerging are trying to kind of address this. And there's a lot of ReFi projects out there that are also looking at, let's say, promoting financial incentives for projects that kind of preserve essential resources and not waste resources. So I think those are kind of the trends that I would be more looking for and that we would be more bullish in investing in.
Very interesting. We have 5 minutes left. I don't think that we would be doing anyone, we would be doing a disservice if we didn't touch on generative AI. It's definitely a trend that we're seeing outside of Web3 and inside of Web3. Who would like to share what they're seeing, what they're excited for? I know that, as I said, when you look at what the application that ChatGPT can be used for, and that's only one part of the generative AI that's coming out there. Obviously, how it can assist with augmented reality, really having, for the first time, as far as I'm concerned, a dialogue with AI that feels very much human-like and will be able to help you and assist you at educational tutors, virtual educational tutors. When I was doing I do a number of panels, and I remember the one in how do we take mass adoption with DeFi, and at the end every single panelist said it's better user experience, and everyone always says it's better education. So where are you excited by how this can be used, and are we too early at this stage to say here's a couple of examples where people are getting it well, doing it well?
I can add something to that quickly, because we had a very hot discussion actually last night in Gnocchi team about Midjourney AI, right? And like ownership of the assets that you create, the art that you create with Midjourney AI tool. You write a prompt and then you have the art. So, can you mint them as NFT? Are they yours? Or and then looking at regulations of different jurisdictions, like in the US, it is, and partially also EU. It says that you need a piece of art that is solely created by a machine is not your asset. And when it's not your asset, that means you cannot claim ownership of it and mint it as an NFT. Whereas one can argue that, that is where the ownership of assets created by AI is, I think, where the discussion between Web3 and AI comes into the picture, right? Who owns this asset and how do we treat this asset, right? And then one can argue that, I put in the prompt and the AI acted as a pen. So the
Mm.
AI generate the art that just generated if I wouldn't put in the input. And now, as you can see, a lot of companies are hiring people for, to actually put in the right prompt in ChatGPT, and etc. So I think the discussion that will get hotter and hotter between Web3 and AI is the ownership of the asset generated with AI, which is quite interesting to watch.
Amazing. We have 2 minutes left, and I just want to get a we could talk for hours, obviously, but I want to get a key takeaway from each of our speakers. Amber has to jump, so she's got a call now. Mona, when you're looking at Web3 trends, either reiterate or maybe there's something that you haven't had a chance to touch on yet. What would you look, what is exciting? Where do you think there's opportunity for people to focus on? Where do you think there's great tech opportunities as well?
So I think in terms of infrastructure, I think is the most exciting, at least for me. I think there's to be able to think about how can we adopt, how can we be flexible with the tech, how can we be interoperable, how can what we build be scalable, how can it be adaptable to regulation, for example, how can we have better UX, UI, right? Easier use cases, more simplified ways of bringing on people into the space. How can we be truly decentralized without being crazy? And what was so well explained by the other speakers about the difficulties of being decentralized from the beginning, which I agree is also not possible, but how can we get there? What are the building blocks to get there? What are the problems? How can we manage and help the issues around governance in a decentralized autonomous organization, for example, right? And then also looking at, if you're not so techy and you think, oh, I'm actually more interested in the fashion space, which is really not my space at all, but I think there is something there with regards to brands entering Web3, community management, understanding the space, understanding your audience, having utility to NFTs, which are potentially pictures, but also real life assets or the likes, right? I think there are a lot of points. And the last one, regenerative finance as well. If you're interested in the climate aspect, there's so many solutions out there that are building and creating in that space, which has a lot of issues, but I think still very valuable to look at that as well, if that's your interest.
Amazing. And 30 seconds are.
I think, for me and many people that we are in this space, we are here for value. We are here because we believe in decentralization and democratization. And this is not going to happen over the night. This is going to need a lot of effort, a lot of understanding, a lot of patience, a lot of dealing with big players. Like one of the audience mentioned in the chat, that when we say the gaming industry is not a big fan of blockchain game, it's not the gaming, the gamers actually love it. It's the gaming studios, the giants that we are going against, that they're not a big fan of it, right? So you just be patient and continue building. That's my takeaway, I would say.
Amazing. Thank you, everyone. We've come to time. Really appreciated listening to all of you. Thank you, everyone else, for attending. We look forward to our next event, which is going to be on the 22nd of February. We'll send out some information on that and look to get you all the recording. Have a great rest of the day.
Thank
Thank you,
you.
everyone.